He was worth $10 million on paper. He couldn't pay his electric bill. Meet David. He owned a sprawling portfolio of rental properties. 3 luxury cars sat in his garage. His net worth was over $10 million on paper. But when the market turned, a tenant stopped paying, then another. His bank accounts ran dry. David couldn't sell a house fast enough. Buyers vanished. His equity was trapped. He maxed out credit cards to cover property taxes. The illusion of wealth was cracking. He wasn't alone. Many high net worth individuals are cash poor. The numbers don't tell the full story. By some estimates, over half of millionaires hold most of their wealth in illiquid assets. Real estate, private equity, retirement accounts, money you can't touch without penalties or a long wait. That's the liquidity lie. Liquidity means access. Cash you can spend within days. A true safety net. But many wealthy people confuse net worth with spending power. They see a $5 million portfolio and feel rich until an emergency hits. Then they panic. Take the 2008 crash. Real estate moguls with billions in paper wealth saw it evaporate. They couldn't sell. They couldn't borrow. Many lost everything. The same pattern repeats in every downturn. The rich are not immune. They're just better at hiding it. Why does this happen? Ego plays a role. Owning assets feels powerful. It signals status. Cash in a bank account is boring. Nobody brags about their savings account. But that boring cash is what saves you when everything else freezes. Consider retirement accounts. A 401k with $2 million sounds impressive. But withdraw early and you pay a 10% penalty plus income tax. That $2 million becomes millions of dollars or less. And you still owe the IRS. That's not freedom. That's a cage. Private equity is even worse. Investors lock up money for years. They can't sell. They can't exit. During a crisis, fund managers may block withdrawals entirely. The wealthy discover their millions are phantom numbers on a spreadsheet. Then there's real estate. A $3 million house is a liability until you sell. And selling takes months. In a downturn, prices drop. You might sell at a loss, if you can sell at all. Your home equity is an illusion of safety. The liquidity crisis doesn't just hit the super rich. It strikes anyone who overconcentrates in illiquid assets. A small business owner with all equity in the company. A landlord with multiple rentals. A retiree with a big 401k but no cash. Here's the twist. The truly wealthy don't fall for this trap. They keep a large cash buffer. They diversify across liquid and illiquid assets. They know that net worth is a scorecard, but cash flow is survival. They prioritize flexibility over vanity. Think of liquidity as oxygen. You don't notice it until it's gone. When markets seize up, the cash-rich buy assets from the cash-poor at fire sale prices. The broke millionaire sells his rental portfolio. The liquid investor buys it. That's the real game. So how do you avoid becoming a broke millionaire? First, calculate your true liquidity ratio. Liquid assets divided by monthly expenses. If it's under 6 months, you're vulnerable. No matter what your net worth says, that's the number that matters. Second, diversify your asset types. Don't put everything into one basket. Mix stocks, bonds, real estate, and cash. But keep a chunk in highly liquid investments. Money market funds, short-term treasuries. Accessibility is a form of wealth. Third, avoid the trap of lifestyle inflation. Many millionaires live like they're richer than they are. They buy bigger houses, fancier cars. Their expenses rise faster than their income. When a crisis hits, they're stretched thin. The illusion collapses. Fourth, understand the true cost of illiquidity. Every illiquid asset should offer a higher return to compensate for its risk. If your private equity deal returns 8%, but you could get 5% from a liquid bond, the extra 3% might not be worth the lockup. Fifth, stress test your portfolio. Ask, what happens if I lose my job tomorrow? If the market drops 40%? If I need $100,000 in 3 days? If you can't answer, you're not prepared. The broke millionaire never asks this question until it's too late. The irony is brutal. The people who look richest are often the most fragile. Their wealth is on display, but it's locked in stone. Meanwhile, the person with a paid-off house and a year of cash in the bank is truly free. They can weather any storm. This isn't about being pessimistic. It's about being realistic. Wealth should give you options, not trap you. If your money is stuck, it's not wealth. It's a burden. True financial freedom means you can act when opportunities arise or danger looms. The next time you see a millionaire bragging about their portfolio, ask one question. How much can you spend right now? The answer might surprise you. The liquidity lie is everywhere, but now you see through it. That's the first step to real wealth. Here's the lesson. Net worth is a scoreboard, but cash flow is survival. Build liquidity first, then growth. And watch this video next. It reveals the one asset class most millionaires ignore. Meet Angela. She sold her company for millions. She put it all in stocks and bonds. Then the market dropped. She needed cash. But selling meant huge losses. Paper wealth trapped her. She couldn't pay her bills. She had to borrow. Interest piled up fast. Her net worth stayed high. But her bank account was empty. She was a millionaire on paper. Cash poor in real life. This is the liquidity lie. Assets look good on a spreadsheet, but they freeze when you need them. The rich know this. They keep hidden cash reserves. Emergency funds nobody sees. Consider a famous tech founder. He owned stock worth millions. He couldn't sell without crashing the price. He lived on credit. His lifestyle was a facade. A single bad quarter could break him. The solution is simple. Keep enough cash for 3 years of expenses. No joke. 3 years without selling anything. That gives you power. You can wait out any crash. You can buy when others panic. For deeper secrets on building real wealth, subscribe now. Next, I'll reveal the hidden asset class the ultra-rich use. You won't find it in textbooks. Click to unlock the mystery.